What is going on, everyone? We are back here with the Pulse, joined by the PeakBot team. I am Dillon, joined by my co-founder and co-host, Ben. Ben, how are you this morning?
Doing great. It's a great morning so far. Happy to be back, ready to trade.
Excellent. Ben's having technological issues with his microphone. You wouldn't know it. He sounds loud and clear, but
This is fake today. This is just for show.
just a prop.
Not working.
But yeah, no, we're very excited to be back. For those of you who are tuning in early here and may not be familiar with PeakBot, just a quick refresher. Of course, PeakBot is an automated trading platform for the retail trader. We make it easy, affordable, and transparent for the everyday person to trade hands-free. Put a stock trader in your pocket. Our bread and butter is options selling. We love collecting premium. We love selling options, contracts, and spreads. We take well-known strategies that have been around for decades and we automate them for you. So we connect to brokers, of course, like Tradier, our great partner, and other brokers as well, for you to pick a stock from our watch list, and our bots do the rest. Now, over the last month, we've, of course, also introduced an alerts service for those who don't have one of the brokers in which we're integrated with or aren't fully ready to automate or outsource their trading. But again, PeakBot, we're here to cover all things option selling from exploration to automation. So today's show, relatively standard agenda. We're going to take a look at some of our trades. Been an interesting week, to say the least. Last week was kind of up and down for a lot of our traders. I took a little bit of a slide in my account for the first week in months, honestly. So we'll take a closer look at that and where I was losing. I think Ben had a bit better luck. Okay, never mind. So I saw a lot of green on that document you had up, but that's probably just premium. So we'll take a closer look at that. We will. I'll give a quick demo at some point during this show just to show people how to use PeakBot if they're not familiar. As always, we're not financial advisors. This is not financial advice. And if you have questions, do not hesitate to ask us live. You can put your questions in the chat here, or if you're feeling shy, you can text us at the number below on screen. That's our business line, rings to everybody. And lastly, if you want to talk to us one-on-one, schedule some time down below at pkbt.app/meet. So I've said enough. Ben, I'll hand it over to you. We can get started. Maybe we take a look at the watch list or some of your trades. What are you thinking?
Yeah, we could go ahead. I'll pull up the watch list on my screen here, and I'm going to be pulling up, of course, the new watch list. And we've gotten a couple of questions from our automation subscribers, because all of our automation subscribers, they're all looking at this watch list still, right? Yeah. So when is the new watch list going to take effect for our automation subscribers? So the difference here is, I mean, this is what everybody sees. This is free, actually, still. And this list updates every hour. But if you go to our alerts page, alerts.usepeakbot.com, you get access to a watch list that has much, much more information on it. And you could sort it, download it. There's a download button up here into Excel. And there's just a bunch of other information on here, like expected value, probability of profit, buffer that's just not on the currently free version of the watch list. So this change is going to be taking effect this week, where this watch list you're seeing here will be on the PeakBot web app. So if you go to app.usepeakbot.com, then you will be able to see this watch list as well. And then what we're going to do is the free watch list that is on usepeakbot.com, that's just available for everybody. We're going to be trimming that down, and that's going to be more of a teaser. You'll still be able to get some information. It's going to be a little bit delayed, but you'll still be able to get some information from it if you wanted to use that. But if you want the real up-to-date, and the new watch list is updating every 5 minutes. If you want the most current information, the sortable information, the downloadable information, you're going to have to either be an automation subscriber or an alert subscriber. And you can get started with alerts for just $5 a week. So really, really low barrier to entry. But one thing that I wanted to point out on the watch list, we are back in earnings season, and we can see the top 2 stocks on this watch list right now are reporting earnings this week on the 18th, which is, I think, Thursday. And if we scroll down here, we're going to see a lot of red. The red rows indicate companies that are reporting earnings within the next 10 days. Wherever you see red, I know Dillon, we know it. I know that people that have been trading with PeakBot for a while, they all know it. But for anybody new, we like to avoid anything red, really. Anything that's any company that's reporting earnings in the near future. And there's a couple of reasons. The biggest reason, in my opinion, is there's no proportional return, right, for the risk that we'd be taking on, right? We're selling options here, so our return is capped. So if we're selling a put credit spread, that's a bullish position. It doesn't matter how well a company does at earnings. If a company reports great earnings and their stock price jumps 35%, it doesn't matter to us because we're just taking the profits from that put credit spread that we sold. Now, if a company reports bad earnings, then we're protected with our hedge. Hopefully, you are using a hedge and you're not, removing that bought side of the strategy. But in that case, we'll hit our max loss, and the max loss is always going to be greater than the actual premium return. So, long story short, the risk just isn't worth the reward, in my opinion, and I think in Dillon's opinion as well. When there's earnings being reported. So we like to allocate our capital elsewhere. I've been loving Dell these past couple of weeks, been trading Dell a lot. Carvana will make its way into our trades every now and then. If anybody's interested in trading live manually, I'll be trading live manually today with Thomas on X at 2 p.m. Eastern. So be sure to tune back in for that. But anyways, so a lot of red, again, which means companies are reporting earnings. And then I wanted to also talk about today, and this is the title of the show, Want to Profit in a Bear Market. And I wanted to talk about this because previously, I mean, if you've been using PeakBot for the past year, a majority of that time, we've only been automating the wheel strategy. And when you start with the wheel strategy, you're starting with puts, either a put credit spread or cash secured puts. And that's a bullish to neutral strategy. So if you were just getting started with PeakBot and the market was kind of turning around, which a lot of people are thinking the market's making a pivot right now, and all of this bullish energy is going to transfer to bearish energy, there's still a way to profit, but it's not going to necessarily be with the wheel strategy. It's going to be with our credit spread strategy. And this is the watch list that I've got pulled up here. The credit spread strategy, and we call our bot the trend spread, because what the bot will do is it will determine if the trend is bullish, bearish, or neutral, and then trade accordingly. So if the stock is in a bullish trend, it'll sell put credit spreads. If it's in a bearish trend, it's set to sell call credit spreads. And if it's neutral, it might just open up an iron condor for you. So in the point of where we are in the market right now, where we might be seeing a pivot, right? We might be seeing a move towards that bearish energy that we just alluded to. This isn't a bad tool to use, even if you're just using the watch list, because if we scroll to the right here, we're telling you what strikes that the strategy. Again, do your own due diligence. This isn't financial advice. There's disclaimers all over the page, but we're telling you based on this strategy what strikes to sell and buy. And then there's some strike prices that are blanked out here because we're just not on that side of the trade, right? So a good example here is going back and forth. You see sell this put strike, buy this put strike. That's the bullish side. And then sell this call strike, buy this call strike. That's the bearish side. So what the watch list is doing, and it's not explicitly stating it, but it's determining a trend. If it's bullish, it's going to show you the put strikes. If it's bearish, it's going to show you the call strikes. And then it'll blank out the sells that are not relevant. So use this tool to help you make your own trading decisions. So if we were to look at this ticker down here, right, Snowflake is in a bearish position or a bearish trend right now, And the watch list is telling us, hey, why don't we sell some calls here? Sell a call credit spread, sell a couple call credit spreads, whatever you want. And we're going to sell them based on the information right now at the 141 strike. And then we're going to hedge our position at the 147 strike. That's going to make a $6 spread for us. So our max loss is going to be $600 per spread. We've got a 3.5% buffer, which means that we could be wrong 3.5% on where the price is going to be at expiration, right? So Snowflake currently trading at 136.17. Again, this information will actually update again once the market opens. These watch lists are only updating as markets open. We found that it was a little choppy with pre-market data, so we set it to only update when markets are live.
Hey, Ben.
So, yeah.
I think it might be helpful, and if finish your thought here. Sorry for interrupting, but as I look at this, for a lot of our viewers who are used to our other watch list, it's very different to look at, right? I'll say it, our other watch list is a bit more straightforward. To be able to read the trend, to be able to read your risk level, that's not being spelled out for you here, right? So I think it might be helpful to walk through how to determine those things on this watch list compared to the other one, and maybe even flip back and forth, because again, like, we're transparent. For me, the person who's more of the layman, right, and not as much of a technical trader, I'm still going to the other watch list, because I just like, okay, low risk, bullish trend, great. I'm not crunching all these numbers. So can we maybe walk through how to quickly determine the risk level of the trade? I mean, you showed the trend, right? It's not as spelled out as easily, but if, as Ben showed here, if it's blanking out the call data, that means it's a bullish stock because we want to sell puts on it. If it's blanking out the put data, then and showing the call data, that means it's bearish because we want to sell a call. Maybe we got to be more obvious about it. I'm not saying we need to edit it live right now, but can we talk through how to determine the risk level of these trades and maybe what a couple of these headers are?
Yeah, and previously the risk was based on the size of the spread compared to the price of the stock. So how wide is that spread compared to the actual price of the stock? And the wider the spread was and the lower the dollar amount was, the more risky, at least we would display it on the watch list. So we kind of got rid of that because there are some, when selling spreads, there are some decent options that we might have called risky, but maybe not so risky, or maybe have a really good expected value, which is this column right here. And you can actually sort, the watch list is sorted by default by expected value. And we're looking for a positive expected value here. And basically what the expected value is saying, if you were to trade this same exact trade setup over and over and over, is it profitable, right? And we have to think about it in terms of over and over and over, because there'll be a certain percentage of trades that we lose. And we have to factor that into our calculations. So that leads us into the next column here, POP. That's probability of profit. And it's the likelihood that an options trade will be profitable, in our case, expire out of the money. Again, just an approximation here, but it's helping us it's helping us analyze more data in terms of, and help us get to a trading decision.
And how's that number calculated, Ben?
So it's taking the delta. It's basically just 1 minus the delta. So when we're trading credit spreads, we like to sell the 30 delta, around the 30 delta, right? And we like to buy the 10 delta. So what we're doing is we're just taking, the probability, and we could use delta as a proxy for a probability being in the money, right? So if we're selling the 30 delta, there's a 30% chance statistically of that contract being in the money at expiration, which means on the other side, the side that we're on, we want it to be out of the money. There's a 70% chance. So all of these percentages here are going to be anywhere between like 70 and 80%, just based on where that delta falls. Because we can't, we're not going to always be able to sell the 30 delta exactly. We're selling the closest to, but less than the 30 delta, because we want to give ourselves at least a 70% on paper, a 70% chance of winning. So that's factor number 2 when thinking through all of the different levers that you can pull here. ROI, of course, is a big factor. ROI, what is the expected premium versus your spread size? So in the case of, I won't use Taiwan Semiconductor because they're reporting earnings, but in the case of Dell, the ROI is 19.2%. That's huge. That's high. We tell our traders shoot for 0.5% to 1% each week. And, we still do that. But it's not going to look like that as smooth each week, right? There's going to be really good weeks. There's going to be bad weeks, but net, we want to see, that slow growth. So we have to be okay with losing.
And that 19.2, sorry, Ben.
What?
I'm the worst today. My timing's off. You could tell.
Yeah, it is.
So, but I want people to understand again, because if they're new to this watch list, I think it's easy to get lost, and we'll talk offline about making it a little clearer. That 19.2%, that's $115 in premium that you're earning out of the $600 you're utilizing to make this trade due to a $6 spread. That's where you're getting that number.
Yeah, and if you have questions about what these fields are, we've outlined all of it up here. ROI is, of course, just the approximate return potential. And then, as Dillon said, it's the premium divided by that budget, that max loss there.
Which I think we might want to add to the ROI definition, premium divided by.
Yeah, we can definitely add the calculation there. But let's keep going because we've got buffer. And I really like seeing the buffer. This is a feature that we didn't have before. And what the buffer is showing us is it's showing us the distance between the current stock price and the sold strike price. So how much does that particular ticker have to move in order for that position to then be in the money again, which is something that we don't want to see. So when I'm setting up my trades, and this is just me again, not financial advice, I like to look for high buffers. So like Carvana, 4.2%. It would have to essentially, we're in a bullish trend there. So Carvana would have to decline 4.2%, which it could. Yeah. Carvana is pretty volatile. So it could, but I could still be 4.2% wrong. And at the end of the week, walk away with a win. Right. So as I keep going, like AMD, 3.4%, VRT, Vertiv Holdings, 4.3%. So that's, just another factor that you can use in your decision-making process. And then of course we've got the size of the spread, which forms your max loss, and then the expected premium earned. So these are all the new fields. And yeah, Dillon, we could talk about how we make it a little bit more clear for everybody. Yeah. But the actual risk of, low, medium, high, or low, moderate, and high, and very high, like we used to have, I think we're going to be retiring that just because there's many different ways that people can determine risk. And, wouldn't you hate it if PeakBot said something was low risk and turns out you lost a lot of money on that? And that's just not a good situation for anybody.
Yeah, and if anybody has thoughts on the new watch list, questions or things they'd like to see, or what they like about the new watch list versus the old one, throw it in the comments, text us, shoot us a note, tweet at us, whatever. We're building this for you, right? We can only build what we think is going to be the best version of a watch list to help you make your decisions, whether you're automating your trades with PeakBot or you're utilizing our alerts. But yeah, let us know. Okay, cool. Sorry to keep interrupting you.
All good. Let's take a look at some of the trades that we made over the last week, and I'll pull up my trade log here, and I'll go more in depth later when I am trading live with Thomas. So, and Thomas and I traded live on Friday on the Trader Hub as well, because we do have a second time slot on the Trader Hub, 11:55 Eastern on Fridays, not 12 p.m. Eastern, 11:55. And we do that because we want to show when PeakBot actually gets into trades automatically at 12 p.m. on Fridays. So in this log, I've got all my credit spread trades. I actually started tracking my iron condors last week. I needed about $1,200 worth of capital. to make my Iron Condor trades last week. I made almost $200, so a 15% return, which is awesome. Winner on the Iron Condor trades, and these are all my trades here. I just paste it into this sheet so that way I can run my formula and then get my actual dollars made. Now on the credit spread side,
zoom in a bit.
Not as much luck. I had to roll 3 positions, and then I just took a loss on Moderna because there was really no salvaging that position. So what I like to do, at least when I'm recording my trades, when I roll a position, I won't count the gain or loss in the current week. I'll just push it out and then report it whenever that's actually realized. So I still have those positions open. I rolled Alibaba and Alcoa Corp out. I'll actually take a look at where I rolled them out to. So Alcoa Corp is rolled out to July 26th. So that's next week's expiration. Same thing with Alibaba. I got EMPH rolled out to this week's expiration. So we've got, if we look at my trade log for this week, you'll see that I've input them here. I still have an opportunity to win on those. And that's why when we're manually rolling, you're going to be looking for those opportunities where you can still come out with a win or even break even. I personally don't ever like to roll for a debit. I'm always looking to roll for a credit and ultimately stick to that strategy of shooting for 1% or 0.5% to 1% per week. As we can see here on these, I've got a lot of percentage points to work with. So if I'm looking at this on a weekly basis, I'll use Alibaba as an example. I'm looking at a potential 16% return on an 80% take profit. That 16% return tells me if I'm shooting for just 0.5% a week, and if I want to make 0.5% a week on this Alibaba position, I take that 16% ROI and then I multiply it by 2 because it's 0.5%. I've got 32 weeks to come out of this particular spread on top. So I can push my expiration back further and further and further. Now, this is not something the automation will do, but it's something that you can do if you're using our alert system trade manually. What our automation system would do is it would just close out the position, cut losses, take that capital and reallocate it into another position. And as we can see here, if we look at column G, this is my capital allocated for the week. So I'm starting out already having $8,000 off the table. Can't play with that. I'm typically trading with around $20,000 each week when we trade live with everybody. So I've got only about half the amount of capital to use up today when I get into my new credit spreads. But again, don't want to be greedy and taking higher ROI and trying to do something more risky to take profit on these positions sooner or get myself into a worse situation. I've just been rolling. So anyways, enough of me talking. Dillon, what do you have going on?
Yeah, so I can go over a couple things. We could take a look at my trades from last week. And also I'd like to maybe edit live my portfolio because I noticed a couple of the stocks, now that we're back in earnings season here, a couple of the stocks that I've been rolling with for a while. A, they've been beating me up the last week or two. And B, they're reporting. They're reporting this week. So let me share my screen here and we're going to go through a couple things quickly. So I'm going to get this pulled up. So when we take a look at things, again, remember, and I'll zoom in here. Remember, I have been on a tear since May 1st with this trend spread strategy. I was up about almost 27, 28% since May 1st. I came back down to reality a little bit the last few weeks. This account at the beginning of last week is around 19.5. So I lost about $500 last week. A lot of it from one or two of my contracts specifically, or spreads rather. So what I'd like to do is we're going to take a look. This is my PeakBot account. Maybe we can throw our heads at the bottom just so we can see this screen a little bit bigger. So by the way, our guy on the ones and twos, Dillon and Tradier, is the man. He's pretty quick with it. So what we're looking at here is my PeakBot account. So on the left-hand side, you can see this is my automated portfolio and all the different trades I'm currently in. Okay, so Alcoa Corp last week, I had 2 spreads live. So I'm in my Tradier account here, and I'm looking at my gain loss tab. By the way, go to usepeakbot.com/Tradier. Sign up for your Tradier account if you have yet to already. They have a Tradier Pro subscription for $10 a month, commission-free options trading. Okay, it's a no-brainer. I was paying 65 cents a contract on Schwab. I moved all my cash out of there, and it's sitting idle. I'm all here. I'm all in on Tradier. Okay, so let's take a look. Last week, with my 2 put spreads on Alcoa Corp, that's these first 2 lines here. Big loser. You can see my gain loss here. I lost about $320 of that 500 I lost strictly on Alcoa Corp. Now, AA, one of the top traded stocks, and Ben, maybe in the background, pull up how that stock performs for us.
Sure.
Just out of curiosity. So AA additionally is reporting earnings this week on the 17th, which I don't love. Now, it's paying huge premium. In fact, if we go back into my activity here and we find AA here, we'll notice that it's paying it paid a real nice premium this week. Almost, so that was collecting 400 on the sold put, paying about, so made it about $300 in premium on the trade that I'm in this week. Actually, no, it's a little different. Sorry. Yeah, this is not as organized as I'd like it to be. But the reason why it's paying a higher premium is because it's reporting earnings this week. So what I'm going to do, I'm in the trade already. It's expiring on Friday. So I am just going to let it rock through earnings, but I am going to set it to what's called smart exit in my PeakBot account. Now, the reason I'm doing that, if we click smart exit here, what that does is it means that it's not going to enter another trade next week. So on Friday this week, actually, when the contract is set to roll, close my current one, open the new one, it's going to close my current contract. It is not going to open a new one. I've just been getting beat up on AA. I think there's better stocks for me to be trading. I'm just going to put that on the bench for a little bit. And to confirm that, I'd just like to take a look at AA on Tradier here. Let's just take a look at, here's the 1 month chart. As we can see, we had a nice, not so nice, but a dip. If we look at the 1 week chart, we're good on the buy side. Still bullish from a technical analysis standpoint. But it's just not really doing it for me. I don't want to get beat up on it again. So now let's go back and let's take a look at CCJ. That was another loser for me last week. If we take a look here, I sold I sold an iron condor last week. So took a loss on a lot of that here. So if we take a look at CCJ on the watch list, let's see where that's at. I think it's still in pretty good shape. So Cameco Corp, we like to see a positive EV, percentage of profits on the higher side of things. It's only a $2 spread, earning $21 in premium. I like this. I'm going to keep it rocking with CCJ. So we're going to keep things live there. Chewy, I had 2 spreads on. Let's see where Chewy's at on the watch list. So Chewy, also a positive EV, decent POP. Only a $1.50 spread, earning $22 in premium. Let's take a look at Chewy. I know I'm bouncing back and forth a lot here, but this is how I go about my decision-making process when placing trades. So last week I sold 2 puts on Chewy. This was a winner for me. As we can see, I made 67 on the sold put, lost about 16 on the bought. So I think I like Chewy. Let's just take a look at it on technical analysis. Interesting chart here. Boy, that was an interesting spike there toward the end of June. Right now, you guys can see we're kind of trading in this channel here. When we look at the technical analysis for a week, 11 buy signals, 9 neutral, 6 sell. I like it. I'm going to keep Chewy. It's been pretty good to me. We're going to take a look at Intel. Let's just see INTC. And Ben, if this flow isn't great, you'll tell me.
No, you're good.
Okay. So here's the 1 month Intel chart. We were kind of trading in this channel here for quite a while and had a nice lift on July 8th. And then we've had a little bit of bounce in here. But when we look at the 1 week, ooh, this is very neutral. I would imagine, I wonder if I sold an iron condor on that. I wonder what it was last week. Let's take a look at gain loss INTC. So last week I sold a call on it, and it was a loser for me. Lost about $90 there, roughly speaking. I think for this week I'm also in INTC again. Let's look at what I'm in. So we're looking for the July 19th expirations. I'm in an iron condor as predicted with that very neutral trend. Again, we're looking at these 4 lines here. I got an iron condor set up. So I'm gonna keep Intel. Let's see where that's at on here. Let's see. So $1.50 spread. I like everything here. By the way, Ben, let me just ask you live. What's a real? I know we want a positive EV here, right? But what's a really good one, right? I know if it's positive, it's good. If it's negative, it's bad. But what's a high EV?
I mean, the higher the better, because basically what that's saying is if you were to trade the same setup, if you were to trade Intel with a 75.8% pop, 12% ROI, $1.50 spread, 18% or 18-cent premium, if you were to trade that over and over and over, you're essentially going to make about 7 cents per share every time you do that. And that's factoring in the losses as well, and the losses being the size of the budget, the max loss there, right? So when thinking about it like that, we of course want to be on the positive side, but of course, when we're trying to make the most money, we want the EV to be the highest. Now, it's important to remember also when you're looking at EV that you're not going to get that same setup every week, right? So you're going to want to move your money around to get into those good setups. Because if you keep moving your money around into a good setup, then it doesn't matter if you're trading Intel or Dell or Carvana or whatever it might be. As long as you're trading good setups, like that's the expectation over time, is that we're going to be putting ourselves in the best situation to win.
Absolutely. So I'm in an iron condor right now on Intel with 1 spread there. We're going to look at Marvel. So let's look at it on the research. Marvel, here's the 1 month chart. Up and down. So I wonder what 3 months looks like. So yeah, we've been trading in a bit of a wider channel here since I'd say maybe May. Let's take a look at what the technical analysis looks like here for 1 week. Ooh, very strong buy on Marvel. You don't often see just one sell signal. So that's very bullish. I'm definitely going to keep that. It's not reporting earnings. And Ben, I don't know if it's worth it, but if any of these stocks that I'm reviewing jump out for our results live, maybe worth checking out. Maybe. Sure. Okay, Ben, you are there. I was going to say, I don't see you on my.
I'm here.
Okay.
I'm just a voice.
All right, no worries. So Marvel for me last week, MRVL, this was a winner for me, which is good. Made roughly, I don't know what, $60 here on that position. And so that one's good. Look, I'm not going to bore us and go through every single one here, but
this is what you do.
This is exactly what I do.
This is how you made 34% last year.
This is exactly right. I'm not going to overcomplicate things. I just want to see that I'm getting into a decent setup. I'll go through the last one with RCL. Let's find it on the watch list. All right. So a good EV, not too wide of a spread, earning $40 in premium. I like my return here, $13. 13% on my cash to make that trade. It's a put. We're bullish. So if I go and look at it on research here on Tradier's technical analysis tool, what was it? What stock was it? RCL. Oh, that's a nice chart there for the year. Okay. Technical analysis for the week. Wow. 0 sell signals, all buys, couple neutral. Man, I love that. Let's just see how I performed on RCL last week and what I'm in this week. So last week, RCL, it was a winner. I had a $3 put spread on it, made about, I don't know, 25 bucks. Again, my math isn't perfect there, but this week, RCL, let's see here. So I'm looking at this line and this line. That's a bit of a wider spread than I would have imagined. But still happy with it. So, Ben, does this look a little weird to you? So this is my, okay, no, 162.5. That's my sold put.
Click description twice because then it's going to organize your trades a little bit better. So now you'll be looking at the same expiration dates back to back.
Okay, cool. Good note there. So my sold put at 162.50. I'm earning this much in premium. This is my bought put paying that much in premium, correct?
Yep.
Okay. So making about 90 bucks here in premium this week on RCL. We'll see how that performs. But again, that's my process. That's my system. That's what I like to stick to. I'm going to offline check to make sure that none of these other stocks in here are reporting earnings this week. If they are, and I'm already in the position, I'll let it rock. Because again, like I'm not picking stocks that I'm not comfortable with regardless. I should be able mentally to be able to withstand 4 earnings reports a year if I'm trading these stocks. But if I have the time to come in and, maintain this portfolio, I'll avoid it when I can. So, what else, Ben? Anything?
I think that's it. Again, I will be live trading manually today using our alerts watch lists today at 2 p.m. Eastern. So if you are interested in live trading as well and just hearing, what my thoughts are and Thomas's thoughts are out loud. Again, we're not financial advisors, but we'll be speaking obviously and talking through our rationale to getting into certain positions. And that'll set us up for the week for our credit spreads, in addition to whatever PeakBot is automating. For me personally, I have PeakBot automating the iron condor on a daily basis, made 15% on that last week. I will be tracking that as a part of our shows and a part of our reports going forward. I was tracking that as I was trading it manually prior to this, but now I'll be doing the same when we are trading automated. So that's the automated part of my portfolio. I'm manually trading credit spreads in my portfolio. So I've got a good mix of man and machine as we are continuing to trade throughout. So join us 2 p.m. Eastern right here on X, or if you're on YouTube, don't feel all alone on YouTube. And we've got 750 something people watching us on Twitter or on X. By the way, do we have to specify Twitter versus X every time?
No.
Actually, I saw a post. Side note, I saw a post. I don't know if it was real or not, but Elon was taking a poll on if people wanted to change the name back to Twitter.
I saw, and I would imagine it favored Twitter.
We have to find the answer to that.
Yeah, I get it. X is cool. It's simple. It's all encompassing, but it's Twitter. So yeah, the only other thing I want to tease here a little bit, again, we now have our alerts, service out and live. $5 a week. You can place these trades manually in any of your brokers. We have videos to show you how to place these trades manually. But again, do that. I bet you do it for a couple weeks, couple months, and you'll realize, what am I doing? Let me just automate this and get the full service, which is only 19 bucks a month. Essentially the same cost. And maybe Ben has something to show us here. He might pull up his screen. But what I'd like to just mention, and Ben, you'll pump the brakes on me here. We have some premium strategies that we're building. Okay. The PeakBot, ours alone, we like to keep it simple with our strategies. We have a couple partners that we're working with, trading educators, affiliates, alert providers, academies. we're building some more complex premium strategies that we've been testing and has been going very well. So just keep an eye out for our communications on launching these premium strategies with our partners, some zero DTE trading, some, additional take profit.
A lot of people watching right now are coming from the Bull Trade Finder audience. Appreciate having you guys here. We are working with Knots to develop a strategy of his own. So we are really pumped to launch that. We actually launched that into beta last week. So that is going to be coming soon. I'm sure Knots will be talking about that a little bit. And then the reason why I wanted to bring this up on screen, Dillon, because you were talking about brokerages before and trading manually and, using whatever broker you want to use. We're using Tradier. This is why right here.
Was that just last week?
This is just last week. This is between, because I'm trading 3 iron condors on the Qs every day, 3 iron condors on the SPY every day. So when we take all of those contracts, add it all up, plus all of my credit spread trades, if I multiply that by the 65 cents other brokers are charging, this is the commission that I'm saving by paying Tradier $10 per month. So you need to open up an account. It's a no-brainer. I mean, I look at this every single week and I think to myself, why do we still have people on Schwab? Why do we still have people on other platforms, right? It's like $10 a month, Tradier. It's a no-brainer.
Do it. We're not getting paid to say this. We want our traders to look. What would you do? What can you do with that $300 last week? You do anything. I'll tell you what I'll do with it. I'll pay my Peloton subscription 10 times over for me to just sit here and look at it. Not like I'm using the damn thing, but like you just go out to a nice steak dinner, go to a movie because a movie costs about that much to attend anymore. By the way, any guesses? A couple weeks ago, wife and I went to a movie. Any guesses on what we're going to log off after this? A large fountain drink, the one with the cool machine that you can make anything you want out of it. You have any guesses?
Large fountain drink. Can you give me like a?
Let's go between $5 and $15.
No, I was talking about size of the cup.
So if it's huge. It's like a Slurpee. It's like a Slurpee drink.
One of the giant cups.
Giant cup. Yeah.
I'd say $12.
It was over $10. It was, I think, almost $11 for a beverage.
That's nuts.
Which is brutal. Do we have a comment coming in here? I was told that you can negotiate the fees with your broker. Ben, I'm handing that to you.
Yeah, you absolutely can. Brokers are looking for high volume, right? So if you're trading high volume, you could absolutely negotiate your fees. And I know some people that have negotiated fees. I don't know anybody that's negotiated fees to where there are no fees. So regardless if you're paying 65 cents, 50 cents, 35 cents, whatever it might be, in my opinion, if you're trading PeakBot strategies and you're selling options basically on a daily basis, especially with our iron condor, doesn't matter what the fees are, you're going to be saving. Like, let's say, for example, I cut my fees in half just based on that screen that I just showed, that $300 of savings. Okay, it's $150 of savings. It's still, well worth the $10 spent to create a Tradier account, a Tradier Pro account, pay them $10 a month. Now, I will say that if you're trading SPX, there's still fees on that. There's still fees on, I think it's any index ticker. There's still fees there. So still have to watch out for that. But yeah, SPY, Qs, all commission free because I'm paying the $10 a month. So you could absolutely negotiate fees. So that's it. Dillon, why don't you wrap us up? We got 15 minutes till the bell.
All right. So as always, sign up for PeakBot. Go to usepeakbot.com. I just put it in the chat on Twitter. Start automating your trades. We take well-known strategies that have been around for decades and we automate them. Our traders' average annual return is roughly 32%. We're not getting rich here and buying Ferraris, but we're beating the market for the most part, and we're keeping it simple. Let's make you 0.5% a week while you're at work. So that can go a very long way. Appreciate everybody tuning in. We will be back. Thomas and Ben will be trading today live at what time?
2 p.m. Eastern.
2 p.m. Eastern on our socials at Use PeakBot. We'll be back here tomorrow morning at 8:30 a.m. to take a look at last week in review. And as always now, live on Fridays, 11:55 a.m. Eastern time on the Tradier Hub. Appreciate our partners there. Thank you so much. Happy trading, and we'll see you at the peak. Take care.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.